Swing trading, welcome. My name is Rosh. I am the founder of Spy Tomorrow. Let's get this part out of the way. Yep, I'm not a licensed financial advisor. I am a guy who creates algorithms and does trading. And here is one of my favorite charts. We can talk about that if you wish. But here's the thing. It's been a rough few weeks. I have to admit, we all have to admit. I mean, if you're overnight swing trader, I mean, it's risky enough as it is. But when you have political comments regularly changing the mood and pressure of the market, well, that's why it's important to hedge, quite honestly. When we're in negative gamma markets, we have to hedge. I mean, I know sometimes like, man, but when I do that, I'm losing some of my profit. Yeah, but when it goes the opposite directions, but hey, you know what? When we've had some of the days that we've had, a good hedge, you could have made money the other direction. It happens all the time, and not as often as you would like, but more than not, it saves you from losing a good portion of your position because you did hedge, and maybe you can gain half of it back because you had a put or a call supporting you in the other direction. So there are many things we need to consider in this process. And, overnight swing trading is its own unique thing. It's between day trading, this little sweet spot between day trading and longer term swing trading. I like it because I can put a position in at the end of the trading day, take a look at my measurements, and then put on my position. And I see it the next morning. Did we win? Did we lose? And hopefully we're on the upside. And quite often we are. Our position, obviously, if we read the pressure at the end of the trading day, it often correlates to how the market might open the next day. But again, you have to be aware of what might be coming, such as earnings. We're heading into earnings, and there's going to be some surprises. But not all earnings surprises actually move the market. I mean, it's the Googles, it's the Metas, it's the Teslas of the world. Those are the ones we have to watch. I mean, a lot of the others, even if they're in the S&P, unless there's a trend, they're not necessarily market moving in themselves. All right. We're getting, let's see, about 9 minutes away to the market close. Our indicator shows up about 4 to 5 minutes before the market closes. And that's plenty of time to make decisions as to what direction we're going to point overnight, either up or down. And there are many ways in which you can apply this. You can buy stock, short stock. You can buy ETFs, long or short ETFs, leveraged ETFs, such as the TQQQ or the SQQQ. And of course, options. Some people like to play really aggressively with one DTE option. Somebody said to me that, oh no, zero DTE. I'm like, if you do a zero DTE overnight, you're not going to have any money in the morning. It's one of those things you really do need to have a one, because now you're just playing into the evening, not overnight. If you're doing a zero, a one can be highly aggressive. It can be highly rewarding, but if things don't go well, if the market doesn't move enough, you could easily lose half your money overnight. Now, we have to consider position sizing. I just did a video that's probably coming out next week, and I talk about a young man who he's new to trading, and he had been doing it for a few weeks, and he went in the overnight swing trading route. And he emailed me. He's like, he's about 3 weeks in, and it's like, I've lost about a third of my account over these last 3 weeks. And we're like, that should have never happened. Why? Well, most likely his position sizes were too large. The best traders, and I know this is not really available to everyone, but the best traders, they trade 1-2% of their portfolio, whatever their position, whatever, if they're day trading or overnight swing trade, especially overnight swing trading, smaller position sizes are better. It'll keep you in the game longer. And that's the idea. The idea is to stay in the game over the long term, not to have one big home run overnight. although it's fun when it does happen. And one thing we always make sure is that we have defined risk in terms of, well, what is it that we're going to trade? If we're trading options, we know what our position size is and we know our max loss. And yes, there are a lot of different types of ways to trade options, but some of them cap your gains, but also cap your losses. And some do not cap your losses. In other words, you could lose more than you put in. And I honestly just don't like to play that game, although there are some advantages to those approaches. And hey, it's right for some people. I just don't recommend that because that's not the way I do it. I don't want to ever put somebody in a position to lose more money than they can afford to lose. Which leads me to the next thing, which is always trade. Look, overnight swing trading is high risk, high reward trading, like day trading. It's one of those things that you use a very specialized portfolio, not your vacation money, not your retirement money, but a high risk portfolio. It could be maybe 10% of your overall asset portfolio. That's fine. That's totally good. But you want to make sure that it's money that you can lose, especially in the beginning when you're learning. See, the thing with day trading is that, look, you're going to have 4, 5, 6, 7 trades in a day. You're learning. You're learning quickly. But look, five trades for an overnight swing trader is 5 days. And 5 days, seems like a long time. It's not one day, it's 5 days. And so if it takes, say, 100 trades to really learn how to use a method or an approach to trading, for a day trader, that could be done in maybe a month or two. For overnight swing traders, that's a third of a year. So you have to be patient over time and learn, take notes, and check those emotions. I mean, that's one of the advantages of overnight swing trading, is the ability to really not depend. Look, day trading is an emotional roller coaster. And in overnight swing trading allows you to check some of that day trading emotion, put it aside, because you're just buying one entry point at the end of the trading day and you let it go until morning. There's nothing you can do about it. You let it go. And so that's an advantage. And it gives you more freedom and time. It allows you to engage in a high risk, high reward style of trading without being stuck to a screen all morning or all day, depending on the style of trading that you do if you're a day trader. Again, nothing wrong with day trading. I'm in awe of great day traders, but I got other things to do during the day. I have other things to do. And so this allows me to participate in the market to make money in ways that I find exciting. And I say find exciting. You know what? If your trading is exciting, if it is exciting, maybe you're doing it wrong in some ways. But look, there is the excitement of when you do things well, and having a good system and approach. Understand your position size, understand your signal, understand how your signal works in different markets. Again, positive gamma, lower volatility, negative gamma, higher volatility. That's why at SPY tomorrow, during different gamma times, it'll be a different algorithm that'll be put out there. And so it switches back and forth. Now, yesterday we had a neutral, and on the front page it said down, which it ended up being, but on inside we were purely neutral. And so I had to fix that on the front page. Although it was correct for today, for everybody looking on the front pages, actually should have been neutral. Anyway, that's been fixed. These coding things. There's the ability for human error to, not human error, but for things to get by you in the process of developing and launching these different algorithms. And I've been doing this for many, many years. All right, so we are at 358. Let me take a look and see where we are. I'm not going to show you all the inside stuff that traders that our members see, but I can tell you it's not looking pretty for tomorrow. that I can tell you, with let's see. Let me look at a couple more things. You'll be able to see this on the front page of SPY tomorrow, the either up or down. Well, I'll tell you, it's going to be down. But what I'm seeing here isn't that pretty overall. Yeah, it's looking like we could have. Well, here's the thing, and I say this, and sometimes this is tough. When we have big numbers, that big numbers, it's really more about the plus or the minus. Is it leaning on the plus side? Is it leaning on the negative side? And so it is leaning on the negative side. And how much isn't always the predictor of how much of a move. We have other data and information to give us a sense if it could be a big move or not. So I'm seeing a big number, but that doesn't necessarily translate into a big move. It just says negative. So negative tomorrow, at least that's what the pressure is showing at the end of this trading day. Maybe something will be said after hours. Who knows? I mean, that's the kind of market we've been in. A lot of political, oil, all these comments can change. So I'm going to personally be pointing down, but I'm probably going to have some sort of a hedge just in case something pops overnight. Again, that's the kind of market we're in. Well, I better let you go so I can make my trade. Good luck trading overnight. If you have questions, of course, you can always head on over to SPY tomorrow. Send me an email. I'm happy to answer questions for you.